Hello guys, my name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. It was a central banks week. We had four major central banks deciding about interest rates and monetary policy. We are still digesting the situation from Thursday with ECB rate decision and QE decision, and remember that we are ahead of an interest rate decision next week from Fed, the event that everybody's anticipating and looking for. Let's look at the calendar. Now what I would like to show you on the calendar are the most important events this week. We don't have any significant news left apart from the oil. About oil, we do have a meeting on Saturday in Vienna, meeting of OPEC countries and other nations that are exporting oil. 14 other nations, although only 5 of them they confirmed their attendance so far. Now oil is advancing a little bit higher due to the reports that Saudi Arabia already started telling customers that they will reduce crude shipments from the next month. So it's a positive information for oil, but obviously we still have to see what will be the outcome and the commitment of those countries to really cut the oil production. From this week, as you can see, yesterday ECB deposit rate decision, interest rate decision, and press conference. So actually rates remain the same, but this statement is considered as very dovish. That is why euro is losing heavily right now. Why dovish? If the QE program, asset purchase program, was reduced from $80 billion to $60 billion. Well, it's considered dovish because it was extended. It was extended till the December 2017 or beyond if necessary. So we can see a commitment of ECB here to print more money. This is an excellent information for stocks. That is why stocks are advancing higher, trading much higher at the moment, and euro is going down. Apart from ECB, what we had was the interest rate decision from Bank of Canada, which strengthened actually Canadian dollar. We had also interest rate decision from Reserve Bank of Australia with rates unchanged. So yeah, let's look on the next week. What's happening next week? Maybe let's use only top news. Thursday actually will be very important. Well, apart from interest rate decision on Wednesday, which I was telling you before, but Thursday will be very important because more central banks will decide about their monetary policy, like SNB and Bank of England. So again, central banks week next week. Okay, let's look at the charts. Right now, maybe let's start with euro to Japanese yen. What do we have here? Is a downtrend and a bullish correction. I was hoping for the price to get here to this resistance highlighted with red color, because then we would have a correction equality movement here. This correction would be the same as this one, but we stopped a little bit earlier on 50% Fibonacci here. This is also a support created by those lows from March from April, from May, and after the breakout resistance from June and July, and the end of June. And as you can see, Italian referendum, also influential event this week, but on Monday. Italian referendum caused an upswing here. Then the price managed to stay above this 50% Fibonacci, but yesterday's ECB dovish decision caused a retracement on euro, which created a double top situation here. As you can see, this top here, this top here, and we're having a divergence of the MACD. Let me show you also other oscillators. RSI, as you can see, from this top here to this top, RSI is much lower, which creates here a divergence situation. I know that we are above a trend line, but we can have a false breakout here. And actually the odds for a false breakout here are, in my opinion, a little bit higher right now. Another instrument which I would like to show you is American dollar to Canadian dollar, which looks absolutely great from the technical point of view. This is a weekly chart, and on a weekly chart what do we have here is a huge decline, a huge downtrend, which started at the beginning of the year and lasted till May. So actually the correction is longer, but it's not so big because the correction went exactly to 50% Fibonacci here and reversed. It looks better on a daily chart here. And as you can see, we had a bounce from the upper line of the flag together with a 50% Fibonacci. But I was still telling the traders that we have a chance for an upswing here and you should go short. Well, you can go short once the price will break this support highlighted with orange color. Because breaking this support created, well, increased the chances for a bearish continuation here, and actually that's what happened. And after the support, was broken, the price went 130 pips lower, which is a very strong movement. You have to agree with me. And actually, from this price action, 100 pips movement to the lower line of the flag looks almost certain. Looks almost certain for me. Obviously, on the forex market, there are no certain things, there are no sure bets, so you always need to be careful, need to protect yourself at all times with this stop loss orders. But it looks very, very good for bears. But in the short term, and in the long term, because in the midterm, we can have a price coming here and a bounce. Actually, this scenario, which I'm now creating on the chart, wouldn't be a surprise from the technical point of view, right? And a further downswing, upswing. I would love to see something like that. It would be very technical. But we still will have an occasion to talk about that. First, we need to focus on this movement here, on the first leg here. Australian dollar to American dollar. Yes, a very interesting situation, because very similar situation to the American dollar to Canadian dollar. Here we have a downswing, we had a correction. It was more a wedge than a flag, but it doesn't really matter. And this correction stopped exactly on 38.2, well, slightly above, 10 pips above. We had the first bounce, we had a second bounce. Second bounce was very nice from the technical point of view, because as you can see, left shoulder, head, right shoulder. We had a head and shoulder formation, breaking a breakout of a neckline, but this was a false breakout, and actually the price went to test this resistance again, and we can copy this, another try and another try. This resistance is under the pressure again today. As you can see, first reaction of 38.2 Fibonacci is positive for sellers, but well, this neckline is not longer relevant. But I would say that sellers cannot pull the price lower. It shows their weakness in this point. So I would be afraid to go short right now, because as you can see, the buying pressure here is high, right? First we had this retracement, 120 pips, then 70 pips, then 60 pips. Now maybe we will have only 30 pips and finally a breakout. So yes, we do have a first reaction on this resistance, but I would feel much more safe if I would wait for an opening of a short position here. So actually, in this situation, I would prefer to wait for a bearish breakout of the support rather than bounce from this resistance, because there was too many tries here. A price tried too many times to break this resistance, which shows that this resistance is under the pressure all the time. American dollar, Australian dollar to Canadian dollar. Here, very interesting situation, maybe on a daily chart. Upswing, but head and shoulder formation. Left shoulder, head, and the right shoulder. Here, right shoulder is created with a flag formation, then a breakout, then a rectangle. Both of them are trend continuation patterns, and they resulted in a downswing. So beautiful display of price action trading. That we do have a downtrend, trend continuation, breakout, downtrend, trend continuation, breakout, downtrend. And actually, what we're having here is a good short-term opportunity to sell, because after breaking the support, the price tests the support as the closest resistance. It happens in the price action trading very often, and is one of the foundations of the price action trading. So if you believe in a price action and you're a short-term trader, you can enter here. I'm not a short-term trader, and I avoid hourly charts, so I won't enter the market here. But if you like hourly charts and it's your time frame, this is a nice situation to buy. There is an interesting situation here on silver and gold, because silver was behaving, was much stronger than gold. As you can see, 2 days ago we had a bullish breakout here on silver, and on gold we didn't have that. Gold is trading very technically also, but in the south direction, and actually we do have a breakout attempt here of this support. So what we are having are 4 similar trend continuation patterns: downtrend, wedge, downtrend, wedge, downtrend, flag, downtrend, wedge. And this green support, why is it highlighted? Because it's 61.8 Fibonacci, but also resistance from here and here from August and from September. So that is why the price stopped here a little bit, but from the midterm price action, we supposed to see a breakout of the lower line. And you know that on gold we are, well, at least I am bullish in the long term, but in the long term, like 2 years, 1 year, 2 years, 10 years. But at the same time, I'm a trader, and I cannot ignore obvious signals from the technical analysis in the midterm, and those signals are bearish, right? We do have a trend continuation pattern, so odds for a downtrend are much higher. And that's the sentiment here on gold right now. Let me show you silver, because on silver we had a breakout from this pennant here, but it was a bullish breakout. Also, we broke this horizontal resistance on 60.85, and it was tested as a support today. It was a positive test, but now the price is approaching lower again. If we would assume, which happens very often, that that silver follows gold, we should expect a bearish breakout here. But most recently, silver is much stronger than gold. Even we are on a gold to silver ratio, so gold against silver, we are heading to yearly lows, which is very, very significant. So silver is about to be the strongest against the gold in 2016 at the end of the year. Okay, euro dollar. Well, two major swings this week. First swing after the Italian referendum was an upswing, and we could assume that this support is definitely defended. But on the first day, the surprise came from Mario Draghi. And where it happened? Well, it happened here, on this resistance. Resistance created by support from March and from October. So you just cannot make that up. Even with such a fundamental drivers here. So a fundamental bullish driver from Italian referendum and a bearish driver from dovish ECB, we do have a good technical setup here. So first, double bottom on an important long-term support. Price went exactly to the closest horizontal resistance and bounced from this resistance. And now those long-term support will be under the pressure again. We'll see next week if we will see a breakout here. So far buyers can be relatively safe because we are still above this resistance, but once this above this support, but once this support will be broken, they will be under a heavy fire. Euro to British pound. Here we had a very good bullish situation on after Italian referendum. As you can see, uptrend, 13.2 Fibonacci, always an important support, also a horizontal support here, and after the referendum the price made reversal here. Reversal was also created by inverted head and shoulder formation, left shoulder, head, right shoulder, so after the breakout of a neckline, we saw a beautiful upswing here, 70 pips, 100 pips on Thursday, which in terms of this pair is very, very good, because you have to consider the volatility of this pair. For example, 50 pips one day, 100 pips other. And obviously dovish ECB sends this pair lower, but still buyers will have a chance to defend this horizontal support again. We'll find out next week how it went. New Zealand dollar to Canadian dollar, still defending this very important horizontal support created by both trend lines and by correction equality and by 38.2 Fibonacci level. As you can see, the support is very, very important here, and once it will be broken, it can send this pair significantly lower. By significantly, I mean at least here, but probably even much deeper to the next Fibonacci line, not only to 50 but also to 61.8. Next instrument which I would like to show you today is New Zealand dollar to American dollar, where I was expecting a strong downswing, but again this lower line of the flag proved to be very strong. First, as you can see, we had a double bottom formation here. So first 21st of November and then 24th of November. The price went higher, and actually this head and shoulder formation is under the pressure right now. Once the price will manage to break this line connecting the top of the head and top of the right shoulder, that would create a sell signal here, the buy signal, and deny the sell signal which is present right now. So far on the daily chart, if it would stay like that, so a shooting star from yesterday and a bearish candlestick from today, there is a hope for the movement like that. But for me, the price went a little bit too high. My idea of sell signal is paused right now. I would think about opening short position again once the price would break the lower line. Again, once the price would go below the neckline again. So far, sell signal is paused. Australian dollar to Japanese yen. Here, after breaking this pattern of the same corrections here, the price advances higher. They broke also the trend line, and here we are about to meet a very important resistance here. Resistance created by this support from December last year, resistance from February, March and April. Here, don't take this resistance for granted. It's just an occasion, but wait for the price action. If you will get a daily reversal candlestick pattern or a price pattern, reversal price pattern here, that would be a nice occasion to sell. So far, not so much. Euro to New Zealand dollar. We were caught off the guard yesterday with this decision because we were anticipating that we can have an upswing here, which started with a double bottom formation and a bullish engulfing here. But it proves why I'm not a big fan of divergences and indicators, because here MACD and RSI were giving buy signal because there was a divergence in a double bottom formation, but it failed. So I'm always telling that going against the trend is very problematic, and it's very hard, and the odds for success are much lower. Going against the trend is more risky. That's what beginners are trying to do. They always try to go against the trend. It's not my game. I like to follow trends, as you know. If you're watching this repost for a long time, you know that I like to follow trends, and it increases the odds of your success when you go with the trend, not against the trend. American dollar to Japanese yen is heading to a very important resistance created by 61.8 Fibonacci level, but also by support from 2014, 2015 and 2016. So it's a very, very important resistance, as you can see. And wait for the price action. Again, don't take this resistance for granted that here the price will reverse now, because it's not for sure, it's just a potential. We still can have a breakout here even after such a strong upswing here. Unbelievable. 1,400 pips after elections. Well, Bank of Japan is happy with this, right? They don't like strong yen, they like to see weak yen. They are very happy with the situation. But there is a chance that when price will meet this resistance, it will come to an end. American dollar to British pound to American dollar, so cable. Last week we said about the possibility of a reversal here, but the price broke this resistance a little bit. This resistance was created by the correction equality movements here. This correction, 690 pips, 790 pips, 100 pips higher, but still it's a flag. Flag is a trend continuation pattern, so there are more chances that we will see a breakout here. Right, that's our view on this instrument. Let me also show you this oil that I mentioned before, oil and DAX. This is oil. They will unable to hold above $52 per barrel on WTI. They created the trend reversal pattern, which is head and shoulder. They broke the neckline, but they didn't follow this because we do have an information that with the Saudi Arabia and this meeting, OPEC meeting in Vienna, that countries not from OPEC will also commit to this deal. So that is why the price of oil is advancing higher. But still, 52 is a local resistance. Once it won't be broken, we are not able to fully commit to the upswing here. And DAX, look at that. Flag, false bearish breakout. After that, strong upswing, and the party goes on DAX. Here is a local support. You just cannot argue with that, even if you think that world stocks will collapse soon, etc., etc. You just cannot argue with that. There is an uptrend. All short positions got crushed. Luckily, we don't have a short position because, again, we are not going against the trend. Even if in the long term we are expecting that the stocks will decline, we enter the market only when the price is telling us to do so. Here we don't have anything, any signals, any bearish signals whatsoever. You just can have an assumption that the price will go down, but only assumption is not enough for you to open a position. You should open a position based on many factors, many technical signals that give you one direction, right? If you have just an assumption, don't trade, because most likely you will fail. Trading is not a game, it's not a hobby. Trading is a job. You have to stay professional, you have to be professional, and in order to be professional, you don't trade on your assumptions, you trade on the price signals which price is giving you. You just need to learn how to read them, right? So that's the situation on the market at the end of the week. Remember, next week FOMC decision, it will be all about interest rate decision in United States. And slowly, trading will be coming to an end. Volatility and liquidity will drop because we will have Christmas, right? It's usually quiet time on the markets. Well, I remember a few years ago, 3-4 years ago, when during Christmas, one day before Christmas, we have enormous movement on British pound, but it's very unusual, and usually the volatility during Christmas is rather low. Okay guys, thank you very much for watching daily analytical report with Alpari. I hope you liked it, and remember to follow us on Twitter and on alpari.news. Thanks very much and goodbye.